Welcome back to Fast Market, everyone. Kevin Hinkson, Nathan Peterson. Now it's time for our cash tag segment. For that, I'd like to bring in the co-founder of LikeFolio.com, Mr. Andy Swan, to the show. He's going to add to our Take-Two discussion, and then we're going to talk about general gaming in general. Andy, you've brought us some LikeFolio data on Take-Two coming out with earnings after the bell today that shows, generally, the first chart is pretty solid data on your mentions count. It looks like both are starting to trend up and pick up pace. And then I see your web visits, and there's a big drop. What is the basis for that big drop? Was it that announcement on GTA 6, or what is the LikeFolio data telling us here?
Yeah, I think, on the web visits front, the big drop is pretty typical for this time of year because it's a 90-day moving average, and so a lot of what happens with Take-Two is a lot of Christmas shopping,
sure.
New game releases, and things like that can cause spikes. The way I look at this chart is more on a year-over-year basis, which is significantly improved as our mentions. So people are talking about this company's game titles. They're getting frustrated with some delays on some of the more popular titles like Grand Theft Auto. They have fumbled many times as a company, and so it's a tough company to be extraordinarily bullish on when the executive team, when the execution of the company is consistently somewhat lacking. But from a consumer demand standpoint, they've got a really good thing going. They've got a good base of users that is growing, that is enthusiastic about the titles. It's kind of a double-edged sword. People get frustrated when there are delays or when games somewhat disappoint them, but that also says that they care, that they have a little bit of a cult-like following for these games and these titles, which is a good place to be. So, for Take-Two overall, we think that there's a cautiously optimistic outlook is warranted here. We think that the company's kind of already gotten most of the bad news in the rearview mirror, or at least we hope so. And they have the customer demand, they have the gamer base to build off of that is really strong. And so, we're cautiously optimistic on Take-Two into this report, and especially long term. I do think if the stock gets above that 200-day moving average that you guys talked about in the last segment, that could be the type of signal where you really start to think things have turned around.
And Andy, when you look at some of these metrics, Kevin and I have been talking about the consumer a lot. We've talked about how it's beginning to kind of pop up on some of these earnings releases, really on discretionary spend. We're going to throw video games and gaming within the discretionary spend category. You look at the likes of EA and Roblox and what they had to say. Can you give us a sense or a read of how you think the consumer feels about, whether, I don't know if Take-Two is passing on higher prices. They've talked about higher developing costs for these video games. Maybe some of that's contributing to some of the push out of some of the release dates here. But how does the consumer feel about either, spending more on video games, or is there any sign of maybe gaming exhaustion or anything to that extent, or does everybody just game and wait for the next iteration?
It's pretty much game and wait for the next iteration. I think that they have, our customer happiness levels and, everything that we have indicates that they probably have a little bit of pricing power. I wouldn't say it's extreme. There's kind of standards that their customer base has gotten used to, and they certainly don't want to cause a revolt at this point. I think they've got to really embrace the customers and that small cult-like following that they have. I would put gaming in the experiences category, which I think is undergoing less pushback from an inflationary standpoint. I think people are more willing to spend on experiences than they are some of the higher end goods, or not higher end, I'm sorry, middle of the road goods. They're less likely to go buy a pair of the new cool shoes, I think, than they are to buy the next version of the video game that they love playing. And I think experiences are avoiding a lot of the cost cutting that consumers are doing. And I would put Take-Two's gaming in that category rather than the goods category.
You know, Andy, as we look to gaming in general and the major players in gaming, NVIDIA's name has to come up, right? It's a big part of really what put them on the map. Before AI, it was gaming, right? Remember, it's so in the back burner. However, if you read the news lately, they just combined with MediaTek to send out more chips that are better for gaming to compete with Intel and AMD and Qualcomm Snapdragon. And now they're talking about, because the big problem with gaming is battery life, right? On mobile. If you go to mobile, it's battery life. And if they can adjust these ARM-based chips that increase battery life, it's a game changer. And then all this talk about NVIDIA getting late in the cycle and decelerating growth, they're going to have another whole growth engine, and everything's going to flip back from AI back to gaming.
Yeah, it was gaming, and then it was, cryptocurrency mining, and then it was AI. There's seemingly no end to the use that these, chips that were essentially graphical chips to begin with. They're finding more and more use cases for these. And I do think that ultimately NVIDIA is in the driver's seat, because the massive amount of money and spend that is coming into their chips from AI based buyers and some from cryptocurrency based buyers is providing them with an absolute windfall of R&D budget. I can't imagine that they're even remotely concerned about the costs associated with developing great gaming chips right now. That seems like it's in third place among their priorities in terms of controlling expenses. And so the idea I would have is that they're the most likely to develop the next great gaming chip, even though most of their focus is on AI and cryptocurrency. I think, success begets success. This is a company that has shown its ability to execute at an extraordinarily high level, even at scale. And I don't think that changes for the gaming industry. I think, if anything, their success in AI and cryptocurrency semiconductors is only going to bolster their ability to make the next great chip for gaming.
Yeah, we're taking NVIDIA's story here on Fast Market and we're flipping it, say, while you're watching AI, don't forget, they're about to change the world in gaming and mobile gaming and battery life in mobile gaming. So, yeah, the more you read about this company, the more it's just a head shaker how incredible they are. Andy Swan, thanks for coming on as always, though, spending some time and bringing the incredible Likefolio data to Fast Market. Have a great day, Andy.
Thank you. You too.
All right. Nathan, this article I was reading about, they're taking ARM, chips, basically ARM-based chips,